Good morning and welcome to this weekly market update from MRC Markets in London. Today is the 26th of October 2012. What we'll do today is go through some technical analysis on Euro dollar cable, dollar Swiss, dollar CAD and gold. Yes, just trying to, I mean we're doing this video on a Friday today, so it's going to be more of a review session. We do normally do them on a Monday, but I thought I'd do it on a Friday this week so we could go back and show what's really happened in the markets, try and explain any queries that we've had in terms of why the market's been moving certain ways. I mean, look at previous examples of fibs, etc. But today's a big day as well because it's US GDP out today, so we'll keep an eye out on that one. We'll show the forecast for that and what it could do to the markets. So yeah, for any new followers, we have 3 moving averages on each of these charts. The red one is a 55 simple, the purple is 100 simple moving average, and the gold one is a 200 simple moving average. This is a weekly chart. We always look at the weekly to start with, just to give some sort of big perspective. We'll look at the daily, and as we'll do a review, we'll look at 4 hour and 1 hour as well to show what's gone on this week. And we might as well have a look at next week as well. We're not making any trade calls recommendations in this video. You do trade at your own risk. If you could please read our full disclaimer on our website, www.mrcmarkets.com. Okay, this is the Euro Dollar weekly chart. First of all, let's have a look at last week's candle and what happened. I mean, we've been saying on this weekly chart, it's all about its 55-week moving average. It has been kind of capping the Euro Dollar currently, and it's basically just making it sticky. Really, it's slicing between the candles, and it's just providing a lot of choppiness. And this has been evident really in the last sort of 6 weeks. Last sort of 5 weeks really. It's just been chopping. We had a close above last week, 55-week moving average, and also over here we had as well. And then we've faked out. And it looks like we're going to fake out this week as well. Of course, it's a Friday, so. Could get a weekly candlestick close below, but I wouldn't be surprised if it did close above and then came up and eventually test this 100-week moving average in the near future. But I mean, this week, it has been kind of due a retracement on this weekly, especially after we had sort of 1, 2, 3, 4, 5 weekly candles in a row. We then got a couple of bits of retracement there, but I mean, in terms of a healthy retracement down to a recent fib, it's nowhere near coming down to the 50%, so it hasn't done a big retracement, but nevertheless it has been very bullish. And of course in the US we had QE, so that is going to weaken the US dollar, as they'll be printing cash pretty much every month. I think it's 45 billion per month, so it is going to weaken the dollar. And of course, out of the Eurozone, we haven't had any negative, any real headline tail risk really out of the Eurozone. And we've noticed this in the past, that when you don't have anything out of Europe, no news is good news basically. So that's why the euro is surviving really, in my opinion, in terms of the fundamentals. Not that we like to dwell on them too much, but yeah. And I mean, in terms of data this week, I mean, let's just flick to the calendar. In terms of Eurozone data, what have we had this week? It's kind of been a mixed bag. I mean, on Wednesday we had some weak Eurozone data, to be fair, and that's why I think we've sold off this week, to be honest with you. Manufacturing PMI, where the German IFO business climate data out, but then we've had mixed data. I mean, US, we've had good US home sales. In terms of cable yesterday, very good UK news. That was a headline out of yesterday. The GDP number was forecast at 0.6% from the shocking previous number, remember, and that smashed forecasts and came out at 1%. So at the UK we've had good numbers. I mean, another mixed bag here. US with some more good US data here. Yes, but I mean, so it hasn't been a massively busy week in terms of data, especially at Eurozone. So I mean, not a lot to do on the fundamentals too much, but yeah, let's go back to the technicals. this week it has been, it's pretty much, I mean, last week's candle, no real direction there. Yes, it's a green candle, but there is a bit of upper wick, so the odds are still kind of towards the downside, and that's what we've kind of had really here. We've had a slight sell-off, but nothing too much. I mean, it could easily bounce back up today, and we could close above this. So in terms of the weekly, it's all about this 55-week moving average. Nothing really else of interest. The only other thing of interest, we do have this trendline resistance here. It's just sticking it up and turn it to purple. Wait a sec. Yes, this trendline resistance is holding, so we do still need to get above that as well. And it looks like it is kind of, I mean, in terms of the weekly, it has been holding this trend line, so it will be key. The weekly close will definitely be key this week. Anyway, let's have a look at the shorter term time frames and what have we had going on. In terms of the daily, we've had a trend line resistance there, and that is technically broken. But if you look around here, you can see the lows around here, so technically we still haven't broken, because you can still bring it out a bit. I mean, you could still have your trend line technically there, and that's been, if you look around here, that's technically where it is. So we are in theory still holding, if you want to really bring the trend line out to the bottoms of the wicks here. So keep that in mind. In terms of moving averages, the 55 days starting to creep up a bit now. So bear that in mind. That could kind of coincide with this trend line here if we do pop up. But hey, if we break, then that's going to be the first one to look out for, that 55-day moving average. And of course, we've got this 200-day moving average, which held quite nicely around here as well. The other thing I'm looking at, if you zoom in a bit on this daily, if you draw a fib from the recent low here to the highs, you can notice that this 61.8, that's better, you can see a bit much clearer. You can see around here the 61.8 level at this one spot, 29.31. It's been holding very nicely. We had 3 candles there, especially this one here. We broke below and then we reversed up. Also around here we're testing it out at the minute, so literally today's candle we are testing this 61.8, and it also coincides with the trend line, and it's looking like it's trying to close back up. Of course, yesterday's daily candle was quite bearish. That's a kind of reverse hammer there, but we still have a bit of upper wick, a bit of lower wick there, and that's pushing up. It's trying to hold this euro dollar currently, but that's the fib. That's one fib that I'm looking out for on this chart for a sort of shorter term play. And that's, I'm trying to think what I've been focusing on this week in terms of fibs and setups. It's always good to look at what's reacting well on the chart. I mean, a lot of people will be drawing fibs from the recent swing there, but it hasn't been reacting too well in my opinion. I mean, if you flip back to that day, you can clearly see that this has been the chart's been reacting well to that fib. So keep it in mind. If that's what people are looking at, then you might as well trade it, as it's been reacting very technically. But in terms of euro, yeah, that's all I'm really focused on this week, to be honest with you. I mean, if you shorten up to the short term time, this is the 4 hour here, you've got the trend line resistance here as well, which is still holding. But that's all I'm really looking at, to in terms of this euro dollar chart. Cable on the weekly, still with this trend line support, of course, and we still have the trend line resistance as well. Let's zoom in a bit. Just neaten this up a bit. In terms of cable, all about this 100-week moving average. I remember saying last week that we were due a retracement, and this is what we've got. The first key target was that 100-week moving average, and surprise, surprise, we've tested that and we're starting to reverse now. This has been helped, of course, by the UK GDP number that came out yesterday. It is good when technicals kind of coincide with fundamentals. This is exactly what we've had here. We've tested this, good data's come out, and it's starting to pop it back up, and it's reacting very technically. This is looking like a big reversal candle here, so keep an eye out on the candlestick close at the end of the week. In terms of shorter term time frames, a daily, what do we have here? One thing I'd definitely look out for, we have trend line support, so that's also holding there. In terms of the fibs, nothing really of interest. So yeah, the weekly and daily, that's all I'm really focused on. in terms of the 4-hour chart, it's similar to Euro. I'll just quickly flip back to Euro. We have trendline resistance there. You can see from highs to lows there. Similar to cable, we have 4-hour trendline resistance here, which is holding currently. So keep an eye on that. If we do break above there, then we could fly up. But as you can also see, we have this 200 bar moving average slicing through it, providing a lot of choppiness, similar to that Euro weekly chart. So yeah, keep an eye on that. But that's all I'm really focused on in terms of I wouldn't go any shorter than that. Well, the only thing I would keep an eye on is if we do have a further sell-off, you could draw a fib on this 1 hour from the recent lows to highs there and see if we come down, but I don't think it'll come down that far, to be honest with you. But if we do, then keep an eye out on that. Dollar Swiss weekly chart, nothing massively interesting really. It's still chopping around this 55-week moving average, similar to Euro, as we're also chopping around there. But yeah, nothing massively interesting really in terms of that weekly. Let's flip it down to a shorter time frame. We have a trendline resistance there, which is kind of actually being broken on this daily chart. You can see with yesterday's daily candle, very, very bullish, which is quite interesting actually, I think. So we could come up and test this 55-day moving average, see what happens there, and of course if we break that, then we've got 200-day moving average coming in there. Let's look at some fibs here. So let's have a look at a fib from the recent high there to the low. We've also broken that. Yeah, so in terms of daily, it looks like it is breaking this trendline resistance, which is interesting actually, because on the well, I suppose yeah, if you bring it in from there to there, it's kind of broken, so you could say it has technically broken. But I would be on Euro, I still think it could bounce up to us, but it's kind of, maybe it's starting to break out of the correlation really, because as we've spoken about before, it has been correlating. Euro, dollar and cable have been doing the complete opposite thing. It's a pretty much mirror image charts, but it looks like it's starting to break out. I mean, because this looks like a pretty much confirmed breakout of a trend line to me. Of course, the weekly candlestick is more important, but I mean, in terms of the daily chart, it has looked like it's broken there. But on Euro, I still wouldn't say it has broken that trend line yet. But on dollar Swiss, it looks like it has. So yeah, that's all I really keep a focus on, to be honest with you. On that dollar Swiss chart, let's have a look at dollar CAD now. Interesting chart. We sometimes look at this chart. It's not one of the regulars, but I thought I'd bring it up this week because it has been quite volatile of late. Especially this week, we had the Bank of Canada hinting that they were going to raise interest rates. So we initially had some strength, but it is starting to the Canadian dollar is starting to weaken up a bit. And this is why you should definitely look at technicals, because in terms of the fundamentals, the Canadian dollar is quite strong in my opinion. Especially this week, we had Bank of Canada, and then the numbers have always been quite good, and we had them hinting of higher interest rates. So if they're going to hint higher interest rates, and you think that the Canadian dollar is getting stronger, but it's still getting weaker this week, especially the last few weeks really. Well, especially last week as well. So in terms of weekly, we're testing this 100-week moving average now. It's looking like it's wanting to post a weekly close above that. That's what I'd really focus on. The other thing I would focus on is if we do continue to pop up on this weekly chart, then keep an eye out on the 50% Fibonacci retracement level, which also coincides with the 55-week moving average there. Yeah, that's how I'd literally have it set up on my weekly chart. In terms of the daily, I'd keep it the same, to honestly, that same fib setup. You can also see we've got the 200-day moving average, which coincides here. We've broken above this 100-day moving average now, so that's the next hurdle, in my opinion, this 200-day moving average, which comes in at 0.9997, so pretty much at the parity level there. Okay, as for the Forex, let's have a look at gold. What have we been speaking about on gold? It's all been about this trendline support here. Spoken about this many times now, and we've now officially bounced off there. But I remember what we were saying last week, in last week's video, after we've had such a strong pop up, and after we've closed above this weekly moving average, and we had 1, 2, 3, 5 weekly candlestick closes, bullish candlestick closes in a row, we said it's due to retracement, and we also saw notice around here that we were struggling at this sort of 1779, 1780s level, and we said keep an eye out if we do get a retracement, and surprise surprise, we're starting to get a retracement now, and it looks like it's wanted to come down and test this 55 week moving average, which comes in at 1669. So in terms of the weekly, that's what I've got my eye on. Let's flip it down to the shorter term time frames. Let's just tidy this up a bit. So in terms of the shorter term time frames, so as you could draw a fib from the lows to the highs, it was still a long way away from that. But the reason I've just flicked it over to the weekly is that this 50% fib coincides with the 55 week moving average, so keep an eye on that fib, leave it up there for some sort of a longer term perspective here. In terms of shorter time frames, if we flip to the 4 hour now, you've got a trendline resistance coming in here, which is holding. It's kind of like a channel actually. You could so let's try and draw an equidistant channel here. So let's draw it up from the highs actually. Let's neaten this up a bit. Let's just change the colour. It's playing games with me. Yeah, so here we go. If you bring it in a bit there, we've got a nice equidistant channel there on that 4 hour chart, which is playing in. So in terms of the shorter term time frame, we can look out for today is see how that reacts. If we do come down further here, the channel could coincide with that previous support around there. But yeah, in terms of bigger picture, the daily, I'd keep an eye out on that fib, and also looking like it coming down to the 100-day moving average. But I think the key level will be this 50% fib retracement, which could also coincide with that trendline support and also that 55 week moving average. So yeah, that's definitely how I'd keep my chart set up for now. Okay, and that's all for today. I hope you've had a great week trading. I might do a video on Monday actually to just to see how this week's ended up, and we'll do an outlook for next week, or I could do it on Friday. But yeah, hope you've enjoyed that video. Hope you have a great week trading. Have another great week trading today. Keep an eye on that US GDP number, which is out at 1:30 p.m. GMT. So that's the US advanced GDP number, forecast at 1.9% from the previous 1.3%. Okay, cheers. Catch you next week. Thanks for listening.